Hey, Bulls and Bears, it's Monday, December 13th, 2021. Will the money printers, yes, the Fed, will they steer the economy into a collapse? Well, they're already steering us into a collapse of our purchasing power via inflation, keeping interest rates artificially low, keeping the banking system liquefied and bailed out and propped up, buying everything under the sun, corporate debt, mortgage-backed securities, you name it, to keep the easy money flowing. We know that's happening. So they're already engineering this collapse, but it's an inflationary collapse, meaning prices are rising, the cost of living is rising, but the purchasing power is collapsing, the purchasing power of the dollar. All right, so we're going to get into that. We're going to talk about the Fed meeting coming up here and what I think is going to play out here with this economy and with this monetary structure here. First of all, please make sure that you are subscribed and that you like this video to help this algorithm to try to get more people onto this channel and onto this information. The more people that are aware of what's happening with the economy and how it's being engineered and steered, the better off we'll all be. So thank you for sharing these videos and for liking. A couple quick notes before we get started. No, I'm not a Chargers fan. Actually, a relative bought me this, and it's something that I would have not worn or not bought for myself. I'm not really a Chargers fan. I'm more of a Steelers fan. The Steelers are kind of bad this year. And actually, since Roethlisberger, he used to be able to scramble, right? He used to be able to run. So every time somebody wasn't open, he could pick up 5-10 yards very easily. Ever since he quit scrambling, Steelers are pretty bad, in my opinion, just my opinion. But no, I'm not a Chargers fan. I know some people are going to be asking about the hat. But real quick, before we get into the news, a couple shout outs to people that have given me some support, bought me a cup of coffee. And I tried to not drink coffee, but I need coffee. So thank you to the following people. Louis B, Tiny Vox, Minoru S, Gabrielle M, and CK Courtman. I try not to use your full name. Thank you so much for your support. Let's get into the news. Look at this headline out of CNBC. This is absolutely bonkers crazy. The Fed is expected to speed up the end of bond buying. The end of bond buying. Sorry, CNBC, that's impossible. The Fed is not going to stop buying bonds. They might signal future interest rate hikes. I don't think they're going to raise the rates or hike the rates, even a fraction of a percent. There's way too much debt. The economy, the debt levels are way too leveraged to be able to even raise the rates by a fraction of a percent. Even the thought or talk of raising the rates has caused panic in the markets. So, yeah, I don't think the Fed, they're definitely not going to end their bond buying. Ending their bond buying means an absolute collapse of the markets and implosion of the economy. You see, once you stop propping up corporate America with all this bond buying, then the real collapse begins. And that would be very interesting. It might be very deadly and pretty scary, though, at the same time. So there's a lot of people out there wishing for that, but it's going to be a whole different world. We're talking Mad Max if the Fed were ever to allow that to happen. That's why I think they're trapped. They can't raise rates aggressively or even signal raising rates because they'll throw panic and chaos into the markets. But on the other hand, they're telling us how strong the economy is. And the question we've always put out here is, if the economy is so strong, great. Raise interest rates. Let's raise interest rates. A strong economy should be able to handle a fraction of a percent of an interest rate hike, right? So that just shows you how the Fed knows they're telling us a bunch of BS, basically. And if you've been paying attention, you already know that they're pathological liars and they're usually wrong all the time. For example, the Fed, they never warned anybody about the financial crisis. Everything was fine. They're paid to keep things calm, to keep people from being prepared. And it's people like me, my job is to make sure that you are prepared and letting you know how this thing really works. And I think they're going to keep it propped up until they don't. And what I mean is they're gonna pull the plug on this at some point. Who knows? What's it gonna be? Will Russia hack our financial system and take down all the banks? Will everything go dark? Let me know what you think is going to be the rug pull or the pulling of the plug on this system But that's the only thing that's going to really end the bond buying, in my opinion. And for bond buying to end, they'd actually have to pull the plug not just on the banks, but on the money printers. But when you think about it, the banks, and that's your bank that you might go to, your credit union, your Bank of America, your Citibank, your Chase, they're also money printers. And what I mean by that is they loan out money that they actually do not have in reserves. Why? Because you don't have to have any reserves now. They've loosened the lending so much where you don't have to have any money in reserves as a bank to loan money out. Right? And just think about if it was a level playing field, if you could do the same thing, if you could loan out your money, and actually you wouldn't have to have money, it's just digits. If you could loan out money that you don't have and charge interest on that, how rich would you be? Well, that's what the U.S. banking system and mostly across the world is consisting of right now. And actually the U.S. is one of the worst. With the zero reserve requirement, the U.S. is one of the worst offenders of that unfairness of the lending system. So yes, the Fed is trapped, right? They can't go much lower on the rates. We already have real negative interest rates when you look at inflation versus the actual funds rate, and how much you can make on your savings or a certificate of deposit. You're making a fraction of 1%. And when you look at inflation, you're basically negative because you're losing money by trying to save money. What else is happening? Well, let's go over to Twitterville and let's look at some shrinkflation photos here. Wall Street Silver tweeted these out here. Tillamook ice cream, I've never heard of that, but reducing their size from 56 ounces to 48 ounces. Some people may say big deal. But the worst part is when you see a smaller size and they increase the price a little bit at the same time. That's the worst. Here's one right here. New cereal box, 11% taller with 1.6% less cereal. And if you look at the ounces, the taller box has 10-something ounces. The shorter box has 11.1 ounces. They probably made the box a little bit thinner so they can make it that much taller, or they could just fill it up less. But in other words, you're paying more and getting less. Even if you don't see the prices rising, a lot of people don't notice this because they're doing this incrementally. They're not going to make the box half the size. That would be too noticeable, so they're going to do it incrementally. Right? That would be like the Dollar Tree doubling their price to the $2 tree. You know, it's just going to be $1.25 for most of their items now. Looks like Hefty's getting in on the action from 90 bags down to 80 bags. Apparently that's the same price. And here's another interesting one out of Wall Street here. When food prices reach 40% of income, that's when the protests and riots start. And yes, I do think ultimately we're going to see that here in the United States. Not sure when, but I think it's coming. There's many countries that are likely to get there 2022, according to Wall Street here, especially with the prices of fertilizer going vertical. Yes, we've talked about the price of fertilizer. Anything that affects the farms, rising energy costs, fertilizer, higher property taxes, you name it, higher water costs, more regulation, higher insurance costs, all that's going to affect the farmers, and that's going to then affect the food supply and the food prices. So at the end of the day, it's going to be the consumer that's paying for it. Now let's add Turkey to the list of countries going through massive inflation, hyperinflation, some would argue. In Turkey, bread lines grow longer as inflation soars. But no, JJ, that's in Turkey. That could never happen here. Folks, no matter where you're located in the world, 2 plus 2 still equals 4. The U.S., you may think we're the greatest country in the world, but we're not immune to supply versus demand. When food runs out, it runs out. It doesn't matter if you're waving your flag that you're American and that can never happen here. It can happen here, and hard times are coming to the U.S. Continue to prepare. Thanks, everybody, for your support. Thanks for being here. Keep stacking. Stay well. Stay safe. Bye for now, people. Peace. Bye.